Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, November 4th, 2009. The broader market is seeing strength, not only in the U.S. but overseas as well. And this does come as the market awaits the Federal Reserve's interest rate decision coming out later this afternoon. Risk appetite is also back on the table. And in terms of U.S. economic data releases, ADP employment report came out this morning and showed that the private sector lost 203,000 jobs in October. Meanwhile, September's figure was downwardly revised to 227,000. And the ISM reported that its non-manufacturing index fell to 50.6 in October from the 50.9 reported in September. Now, taking a quick look at the spot FX market, the yen is lower against the major currencies in today's session. Now, this does come as we're seeing a gain in equities as well as commodity prices. And the higher yielding currencies, including the euro as well as the British pound, are seeing strength against the US dollar today. Both the euro as well as the pound were helped by firm services PMI in the Eurozone as well as the UK. Now, euro-dollar did recover from losses in the previous session, trading back above the 1.48 level. October Eurozone service PMI was revised higher to 52.6 from the 53 reported in September. Meanwhile, the UK services PMI rose to 56.9, which was the highest since August of 2007. Now, one way to trade your views on US dollar strength or weakness is to take a look at ISE's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, we're going to take a closer look at the individual FX option pairs, starting out with AUX, which is dollar Australian. Now, the pair is under pressure and the RSI has just come against its neutrality area at 50% and is reversing down. The preference of trading central analysts is short positions below the pivot at 113.85, with targets standing at 107 and 102 in extension. Now let's take a look at dollar sterling BPX. The downside does prevail and the preference of trading central analysts is short positions below the pivot of 63.50 with targets standing at 60 and 58.70 in extension. The pair is challenging its support and the RSI is currently mixed to bearish. Next, let's take a look at the CDD, which is dollar Canadian. Now, caution is advised and the pair is reversing down from a declining trend line. The preference of trading central analysts is short positions below the pivot of 109 with targets standing at 102.50 and 100 in extension. Now let's move on to dollar euro, which is ticker symbol EUI. The pair is under pressure right now and has struck against its bearish channel upper boundary and should reach its next support. The preference of trading central analysts is short positions below the pivot of 69 with targets standing at 66.50 and 65.50 in extension. And now moving on to dollar Swiss franc, which is ticker symbol SFC. The downside does prevail and the pair has struck against its resistance and should face weakness as the RSI is capped by a declining trend line. The preference of trading central analysts is short positions below the pivot of 104.40 with targets standing at 100.30 and 99 in extension. And last but not least, let's take a look at dollar yen, which is ticker symbol YUK. The pair is under pressure and is challenging its support. The RSI is currently mixed to bearish and the preference of trading central analysts is short positions below the pivot of 92.40 with targets standing at 89.50 and 87 in extension. Now, in our next segment, we will bring you our trend opinion for the week. Now, last week, the US dollar recovered versus the major currencies, and Trading Central did take advantage of this to enter a call on the EUU. Now, this week, Trading Central analysts are cautious on the greenback as some various patterns are appearing for various pairs. So, in terms of performance summary, the portfolio currently stands at 1,252.98% since its inception in August of 2007 and is up by 621.99% since the beginning of the year. Now, we do have a trade alert for you right now, and in the last follow-up, Trading Central did recommend considering calls on the CDD as the pair is breaking above its medium-term declining trend line. Meanwhile, Trading Central analysts are also looking at the YUK, which has struck against its resistance, and a rebound should not be ruled out in the short term before a new down move. Now, looking ahead to next week, Trading Central analysts will be monitoring the US dollar for any false breakouts. They will be looking at the BPX as well as the PZO, which is the US dollar against the Mexican peso, as the pair is rebounding on its support, but its daily RSI is currently lacking upward momentum. And that does wrap it up for your weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a wonderful day.